So a lot of people look at the moment that we are in right now, and they see very high valuations. And I don't know how you would deem sentiment, but there's certainly a lot of enthusiasm around technology like AI. Are we in that moment?
There's enthusiasm. There are high valuations. I don't know enough about tech stocks or stocks in general or AI specifically to know whether the valuations are excessive. My response to date has been that the valuations are not crazy. High, but not crazy. And when things are either high or low, but not crazy, you can't make an observation that has a high likelihood of being correct. And, this may prove to have been a time when you should have become defensive. And people will look back and say, well, why didn't you? But I don't think you can say that dependably right now. Expensive and going down tomorrow are not synonymous. And I wrote a memo celebrating the 25th anniversary of that first memo, bubble.com, that got attention. I wrote a memo called On Bubble Watch, and I said that, to me, the main ingredient in bubbles is psychological excess. There's no such thing as a price too high. And I don't detect that level of mania at this time, so I have not put the bubble label on this incident. Because
some people are wondering if there are echoes back to the dot-com bubble with AI. Well, transformational technology by all the chip stocks that are playing into it.
Right. Well, I think there's relatively little doubt that AI will change the world. And AI has been successful as an investment, and people are piling in, and there's some fear about being left out. But to me, it just hasn't, this is a judgment call. And to me, it just hasn't reached that critical mass of mania.
Value is another thing. You just wrote about value in your recent August piece. Do value investors, are they missing something?
A lot of it came down to whether you're talking about a value with a small v or a big V. Value investing with a big V is kind of a, shall we say, a sect. And it has hard and fast rules, and it's firmly delineated, and we do this, but we don't do that. And I think that the key to excellence in investing is open-mindedness. So that's probably not a good approach. On the other hand, you should stick to your last and the things you're good at. But I think that value investing with a small v, which means trying to figure out what something is intrinsically worth and seeing if you can buy that at a reasonable price, I think that makes a lot of sense.
Right now, even in today's environment?
It's tough because, a conjectural field like AI, you probably can't reduce an AI company's potential over the next 30 years to a discounted present value today and try to buy it at that or less. So when you get into the new thing, which where sometimes big money is made, it's harder to do that on a value basis, especially for startups or companies that are early in their life cycle. But the connotation of hard value investing has been prosaic companies that have existed for a long time, that are not really on a growth curve, but rather are quite stable, but have repeatable cash flows and earnings and so forth. That's kind of the extreme of value investing with a capital V, and that may be too restrictive. So I think something in between. I think based on the historic numbers, something like the S&P 500 is expensive today. There's no question about it. The PE ratio on the S&P 500 is around 24 on the next year's earnings, and the historic average is 16. So you can't say it's not expensive. But what you have to engage in is, and my last memo, The Calculus of Value, I gave what I thought was part of the bull case, which is the S&P now is better. They're better companies. They have market dominance, fabulous products, moats protecting against competition, enormous incremental profitability, and great growth potential.
So the optimism is warranted.
They're better companies, so they warrant higher multiples, and the optimism is warranted. And I'm not knowledgeable enough to say that's wrong, but but this is an example of something called "this time it's different."
Which that must worry you a little to say.
Well, "this time it's different" is always said about the quote new thing.
It's said during bubbles too, right?
It's especially in bubbles,
yeah.
And it is the sentiment that gives rise to bubbles. This is something we've never seen before. There's no historical parallel. This thing's going to the moon. The valuations are high, but this time it's different.
So can we expect 35 more years?
That's my goal. Will you still come visit me?
Of course. I'll come visit you, and we'll interview you every time, because we always want to hear what you have to say.
Thank you very much.
Thank you so much, Howard. Really appreciate it.